Welcome back, traders. This is our weekly update on the gold market. Gold was on the rise in the latest daily sessions after making consecutive movements higher in the previous weeks, displaying a rather tense bullish appetite by traders. In general, we are seeing the precious metal market being on the rise as more economies feel more confident at the moment. This report will help traders identify some of the most important fundamentals relating to the gold market. As a closure, our technical analysis will cover for information on gold's price action and help traders with useful levels. Now, in the past week, economic data from around the world confirmed some of the biggest economies are currently on a smooth recovery path. Inflation data from the two biggest economies worldwide, the US and China, had improved, being on the rise, despite the fact that we had mentioned in our previous weekly report that traders would be on the lookout for inflation data as they are very important for gold's price action. These readings tend to provide other suggestions of economic performance at the same time. First, it is an indication that consumers may have more money to spend or invest at the moment, and we could see this trend increasing drastically in the next months also. Second is the fact that industrial and manufacturing activities seem to be on the rise, which can also be a sign of further increase in consumer prices, raw materials and commodities. As long as the market is getting the feeling that inflationary pressures are creeping up, then gold's price could be following up simultaneously. The precious metal is also continuously supported by the weakening of the US dollar. The greenback is on a continuous downward trend since the start of April, as the dollar index chart indicates. According to various sources, market participant expectations for an interest rate hike in 2021 seem to have faded after Dallas Federal Reserve President Robert Kaplan stated in the previous days that he does not expect interest rates to rise until next year. Please note, traders should be aware that any information or indications about where monetary policy stands and where it could be heading in the current year could move gold's price accordingly. Furthermore, upcoming economic data in the following days can be a considerable target for traders, as any surprises could impact gold's price action. On the 20th of May, we get the weekly initial jobless claims figure, while on the 21st, we have a very busy calendar day with preliminary PMI releases for May from many countries around the world coming out, along with the US existing home sales for April. On the 25th of May, we get the US consumer confidence figure for May and the US new home sales units for April. As a closure, we would like to note that even though the current fundamentals of the gold market support the recent upward movement, some analysts believe the move could be overextended, which may suggest that speculation can also be involved when trading. Caution is advised at this stage, as gold has traditionally made large daily movements. Moving now to our technical analysis, please note this is gold's daily chart. Gold has been characterized by a strong bullish momentum since the start of May. In the past 2 weeks, gold has moved between the S3 1815 support to the S2 1840 and then higher to the S1 1860 line. As the price action was within the S3 and the S2 for most of May, all the pre-mentioned levels have been tested, but the only one that has not been breached downwards is the S3 1815, proving to be the most solid among supports. Now, if the upward momentum continues, we might see a move closer to the R1 1885 resistance level, which has not been seen since the 8th of January. Higher, we have also noted the R2 1905 resistance, and at the top we have placed the R3 1925 line as the ultimate goal for buyers. Please note the RSI indicator below our chart, which is currently crossing the 70 level. This could imply an overbought market by the yellow metal, and some analysts believe it could be the first red flag before a correction lower. However, April and May have been very resourceful for the bulls so far, and in our opinion, the market could be looking at higher levels. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, please make sure to share and subscribe. Also, as an effort to increase research information, we are now setting up live webinars on various subjects with technical and fundamental analysis included. Our followers are welcome to attend. Thank you very much for your time and focus. from everyone here at IronFX wishes for solid trading.